Hi, everybody. Dale Pinkert from TradeGATEHub.com. I want to start off looking at the Ruble, although I know a lot of your FX brokers are not allowing trading in the Ruble due to its volatility. If I just covered up the title of this chart, I have a pretty clear three drive to a top formation in US dollar Ruble, and that we could get a nice little pullback here. If we are putting in at least a short-term high in the Ruble and the US dollar Ruble starts moving down again, perhaps there's a ceasefire coming that would, give the market some hope for that hostilities can stop for a while, which means that you probably will get your break in crude. But I wanted to show this chart because these formations, if you're patient and you wait for them, they don't all work, but this is pretty classic looking in US dollar Ruble. Another significant event. We're really getting close to, this is the area I was talking 1050, 1040, and the Euro USD had a low today of 110.58. So, we're starting to test this important trend line, which I've shown on the weekly right here. And on the monthly, this trend line goes all the way back to, I believe, 2015. Just take a look at this trend line. I've been featuring it here on our videos. So this is the third test of it. We had one here, had a pretty good rally, another here. This was a better rally. And now we are in here. Ceasefire or some type of calming down of tensions would have a positive impact on the euro. The dollar didn't quite reach my targets. So, I was looking for, that's a monthly chart. I was looking for a little bit over 98. We are diverging on multiple time frames. We did make a new high up here. So I'm looking, 98.20, 98.5. And I'd rather buy the euro on a day when, say, if the euro was down 24 and cable was down 50, I would be more interested in bottom picking the euro. So I'm going to wait for that. I just do want to make the point that even though the euro has made two successive new lows in the last week or two, here's the two successive lows. We had right here, we took that low out. That was part of the puzzle. Then we had another marginal new low here and another low here, tagging that long-term trend line and speed line. And yet euro pound has not taken out the spike low that we had here at 82.80. So this is also an indication. I do expect euro pound to kind of give us a tell that if the euro can start appreciating against the pound, that it could start appreciating against the dollar. So this is starting to build the case too for an important turn in the euro, an important turn in the dollar. We didn't quite get there. We got to 80. But if you're a long-term trader and you're not leveraging out big, there's nothing wrong with beginning to build some short positions in the dollar. If you're, you don't have to be perfect. If you're not using a lot of leverage, you could even go out and start diversifying in fiat at a commercial bank without leverage, and just, have diversification of your paper in different currencies. I do have to say that I'm very impressed with how the Aussie has held up with the dollar making new highs. I was expecting another low in Aussie. That's looking less likely to me because we're not that far away from targets in the Dixie, another 60 points from here. And, that's when I'm going to start. And we'll see where the Aussie is at after that event. But it, to me, at this time, doesn't look like it's going to make new lows. Very interesting action in the yen. they just can't kill it. People keep trying to short it. Should have done a lot worse with risk off that we had and higher oil and even lower yields that we had this week. A sharp move in yields to the downside that the market's trying to get some back here. Perhaps we have some type of neckline here in the 10-year at 170. And the high was 205, so that'd be 35. That could take it down to 145. So let's see what it does into the Fed. I know Powell has testimony in Congress. Right now, I'd be more in favor of selling a rally in yields and buying a break in the notes. Here's your TLT. They started to pull back here, but I don't think this bear market rally is done in bonds. I think we'll get a pullback here and then higher levels. So the yen is very key. It actually holds the hope. I know it's been a long time. I've been talking about the potential for a tag of this upper line, wedge line here up. Now it's coming in around 17.5. And with that happening, there could be a nice little correction in the gold. The gold tried to rally. It's like, was 61.8 back here. Silver acted so much better yesterday, but it's acting worse today. It just took out the highs before the big move that we had here on the invasion rules. So, okay, let me look at this. I wanted to point out the invasion lows. So almost every market, crude, has taken out the invasion high that was here, right? And the dollar has taken out the invasion high. Silver took out the invasion high. This was it, or it got right to it. I guess we didn't take it out in silver. We didn't take it out in gold. And you know what? A lot of people would have thought we would have taken it out. This was the turn in the S&Ps, completing something here. And you almost have to respect the way S&Ps have held up with, European indexes have been under pressure. And could it be that simple that just having a body of water separating us in the US and the Australians out there, and also the UK, just having that body of water not being connected to the landmass where Russia could push west has given some safe haven flows into the dollar. And if you look at the S&P compared to the DAX, you'll see that the S&Ps have held up much better, and the DAX is pressing the lows. So we're entering a very important time frame. I encourage people to get registered here on TradeGATEHub because I post here, Mike posts here. We have Patron, we have Brookie, we have Mo, we have guys in here that are trying to get better. I'm trying to get better. If you're not trying to get better, you're not growing. And if you're not growing, you're dying. So I'm a big believer in iron sharpens iron. And being part of a community makes you accountable for what you share with your trading warrior brothers and sisters. So come to TradeGATEHub.com. And that's where Mike and I post and the other members and become part of our trading family. It's free, and it's not free just so we could upsell you a subscription. It's free because the owner of TradeView Tim Fury has been very successful in the industry, and he wants to give back to traders and has invested in this platform to give traders a place to go and a place to grow. So until we meet again tomorrow, I'm going to have the Pivot King with me. Steve's has a great story. He's an excellent trader. Usually doesn't do these, but we become friends over the last several years and look forward to hearing about Steve's journey and sharing it with everyone. He is the pivot king now, but I'm going to ask him what it was like to be the pivot pauper on his road to kingship. So tune in tomorrow. Good luck. Keep powder dry. We're getting pretty close, in my view, to this inflection point in the dollar, and perhaps it's one more 200 pip push up in US dollar yen. And above all, when you look at what's happening in the world, it isn't really difficult to be grateful that we don't have to, rush the border to get out of here, and that we still live with peace in our country. So I'm grateful for that. And to me, it's priceless compared to pips. So everyone have a great day and pray for peace. And I'll see everyone tomorrow with the Pivot King. I believe Mike is on in an hour and 20 minutes. One of the best stock pickers I've met, and I've been around for a while. That's a wrap, everyone. Hope we're adding value to what you're trying to accomplish in a difficult endeavor and in pretty difficult market conditions. But as Mike says, tough markets don't last. Tough traders do. Adios.